Welcome to today's market report.
Global equity markets rebounded and Treasury yields rose on Tuesday as an easing of China's crackdowns on tech and COVID-19, along with solid US retail sales in April, suggested economic growth might be getting stronger. Retail sales rose 0.9% last month, while data for March was revised higher to show sales advancing 1.4% instead of 0.7% as previously reported, the Commerce Department said. The data show U.S. consumers weathering inflationary headwinds as sales gained for the fourth consecutive month. Sales are nominal, so much of the increase is from higher prices, if prices moderate enough to relieve some of the pressure on consumers. US and European stocks rallied following gains overnight in Asia. MSCI's gauge of stocks across the globe rose 1.92%, while the Pan-European Stock 600 index closed up 1.22%. The Dow Jones rose 0.28%, the S&P gained 1.89%, and the Nasdaq added 2.57%. The rally is partially a reaction to overselling after the Nasdaq and the S&P last week posted their sixth consecutive weekly loss. There is battle in the stock market between what breaks first, inflation or the consumer. The stock market is betting that the consumer is going to break, and credit markets are betting that inflation is going to break first. Data also showed industrial production rose 1.1% in April, with the manufacturing capacity utilization rate at its highest since 2007. The sector is running too hot and needs to slow for inflation to get under control. The Federal Reserve will raise the federal funds rate 0.5% point at each of its next two policy meetings to throw some sand in the economy's gears. Despite the recovery seen on Tuesday in the GBP-USD pair, the pound is not out of the woods. The Rabobank Bank considers risk appetite looks vulnerable and warned the pair could drop to 120 in a 3-month perspective. The euro-dollar pair surged to 105.55, helped by ECB's comments that a 50 basis points rate hike should not be excluded.
This is today's market news. Thanks for listening. We'll see you next time.